All right, as you guys can see, the markets are mostly green today. The S&P 500 largely green. We see a lot of big tech pushing it higher. Over on crypto, it's slightly flat, but overall mostly green. I'm going to cover some of the most bearish narratives and bearish problems that this market is facing. I'm going to do a quick recap. I'm also going to touch on some of the bullish narrative, and we're going to try to decide what we could expect from these markets in the coming days. I'm also going to touch on a couple stocks that are flying off today. I'm going to give you guys some fresh technicals. You know the way I like to do it. This is the Stocks with Josh show. As always, thank you so much for hitting the like. If you want to get daily stock and crypto insights, charting analysis, hit that subscribe and hit that YouTube notification bell. Okay, what is some of the bearish narrative surrounding these markets? Well, we know one of the biggest ones is we've got the inverted yield curve. 100% of the time when the yield curve has gotten this inverted, it has led to a recession. So in 2022, that's when it began to get the first signals of inversion, and we thought for sure that we were going to get the big drop in 2023. But all of 2023, the markets have been going higher. So what's going on with that inverted yield curve? I'm going to touch on that in a minute. Regional bank crisis. That's another really big one. We've seen just a handful of banks fall apart, and the size of them was significantly as large as all of the big banks that had fallen apart back in 2008, 2009. And so we know that this is going to lead to a massive credit crunch. That's two legs of the credit problem that we're going to be dealing with. The first one is that the banks don't have any money to lend out because they're underwater on their bond portfolios, which means if there was a run on any of these banks, they simply would be standing there with their hands empty with nothing to give you. So how can they begin to lend money if they don't even have your deposits? That's the first leg of the credit crisis that's looming over the markets. The second is that all of retail is spending down their savings and running up their credit cards. Credit card usage has gone through the roof, and it's nearing the top of usage capability, and at some point people are simply going to have cards getting shut down. No more credit's going to be extended to the retail public. We know that the big banks are the ones who extend credit to small businesses, and there's going to be this massive credit crunch that is yet to be realized fully. We're on the cusps of it, but we know it's a very big problem. Then we've got the Fed rate uncertainty. The Fed had to deal with a 40-year high inflation number, and he came out of nowhere with massive rate hike increases after a decade of keeping them at zero or near zero. He came out of nowhere. He did 4 unprecedented 75 basis point rate hikes, shocking the market. That problem has affected everybody. It's affected the big banks. It's affected the pensions, the life insurance policies. Everybody's dealing with what the Fed has done and how quickly he raised interest rates. But we don't know if he's done, because we don't know if the problem of inflation has really been solved yet. Yes, it's been coming down, but we don't know if it's going to get sticky and begin to go back up, and then he could begin to have to raise rates more, causing all these problems to become even worse. So we've got Fed rate uncertainty. Then we've got the newest problem is this perilous debt ceiling crisis. This one is obviously a really big problem. And if you go back in time and you look at the last time the US tried to deal with this, it was back in 2011. And when the politicians didn't get into agreement to raise the debt ceiling, we know that they have to, because obviously the country has to continue to run. But when they were fighting it out and they didn't get into agreement, the markets fell near 20% in just under 2 weeks. And so we know that that could happen right now. If these guys continue to fight and they don't come to the table and make a deal, we could be facing at any given moment, running here into the month of June, the potential for these markets to fall 20% very quickly. And as a side note, it took almost 6 months after that 20% drop for that to be recovered back in the market. So it may not just flash down quickly and go back quickly. It could flash down quickly and take quite a while for it to come back. That's a big concern. And then we've got the lowest M2 money supply since the Great Depression. Now, I know that's not one that maybe is being talked a lot about, but basically what it represents is that there's cash is drying up in the system. It's a negative number, and it's not been this negative since the Great Depression. And the way that this particular indicator is used, it typically precedes, when this numbers gets negative like it is right now, it precedes a spike up in unemployment. And then we've got the issue of lower corporate earnings. That's another big concern of the market. And we've got the shrinking GDP forecast. The Fed is calling for an under 1% increase in 2023. He's saying that we're going to get down to a 0.7 GDP, which means that the economy overall The GDP represents gross domestic product. It's all of our combined work and everything that we're producing. He's saying that's going to shrink. Well, if that's going to shrink, then we know that that's going to lead to less money, less corporate earnings, less individual wealth. That's a big concern. The Fed, though, is even more pessimistic about 2024. He's saying that in 2024, that the GDP is going to fall to 0.4. We're going to get even closer to a zero GDP, which means that the economy is not growing. Despite all of these bearish macro dynamics, here we are today. The markets are green. They've been green since the beginning of the year. All of 2023, things have been steadily moving up. So I'm going to break down some of the bullish ideas that are balancing this extreme negative view. And I'm going to touch on a couple stocks that I'm in that are moving really, really well today. Let's just take a step back, and I want to re-examine 2022 a bit more carefully, because obviously that's where some people are saying the lowest low of these markets might have been. So we're going to examine, is that possible? What's the bullish side? Is all of these negative macro events going to lead to a massive capitulation in the market? Well, if we go back in time, we see that the S&P 500 dropped near 30% in 2022. It actually went down around 28%. It did it over the course of 280 days. But there was a particular day in October, we're talking October 13th, where the market hit a low of 3,491, and it bounced hard. A lot of buyers came in on that day. At that particular time, Bitcoin was around 20K. It was just a little bit after that the FTX collapse occurred, and Bitcoin flushed down to 15,005. It went sideways, going a little bit higher. It's since, like everything else, been shooting up. And right now, Bitcoin's sitting at 27,000. And Apple was a big one. On October 13th, Apple was $134. Shortly after that, it touched down to $125. But today, Apple's right around $172. We are way off of our Apple lows. And then today, the QQQ is breaking out. It's been moving up against an area of resistance, and it's finally squeezing and breaking out. QQQ measures a lot of the big tech. So before I examine the bullish side, let me take a quick station break. If you need better trade tools, the moomoo investment app is offering up to 20 stocks to open and fund an account. This is a limited time offer. It's just good for the month of May. This is a pretty good offer from them. It's one of their highest free stock offerings. You can click on the link that I put in the top pinned comment, as well as the description of the video. You can get all the details of that offer. But the best thing I like about moomoo is that I host a chat group on that app where I talk stocks every single day with those who are in that group. That group's called Stock Josh Fam. If you're a member of the chat, please say hi, throw a heart in the comments for me. Okay, let's just quickly talk about the bullish side and see if there's any weight to the bullish argument, if there's any weight to that question, did you miss the bottom, in light of all the bearish macro events I've shared with you guys so far. So the Fed, he's got inflation somewhat under control, and there's a strong possibility that he could pause raising any more rates. Inflation has been steadily moving down and moving in line with economists' expectations. The trend basically is going lower. And then there's the forecasted full earnings recovery by the end of this year. Corporate earnings are suggested to be fully back to where they were and be completely out of a downfall by the end of 2023. And there then lies the possibility of corporate earnings going up in 2024. Now, even though the Fed is forecasting a lower GDP, when you look at the charts, what this chart's showing me is that it bottomed in May of 2022, and by December, it looks as if it's going to fully come back up. That's the trend, is moving upwards right now for corporate earnings. You got the low M2 money supply. That's simply because we flooded the market with all the stimulus money, and it's simply a reasonable correction from an unprecedented moment in time in which we put so much money into the economy. Well, then you got the debt ceiling, which is something that could actually just get resolved. The politicians could come together and they could actually agree on spending more money. So we got to ask ourselves the question, is it just possible that they're going to simply work this out and not get into a heavy deadlock? It could go in any direction. All the politicians want to win. Each party will go back to their constituents and they'll say that they did what it took to make this work for the American people. So The bottom line I'm telling you is that a lot of people are thinking that they will not make it work again and that we'll get that guaranteed drop off like we did in 2011. But if these guys just work it out and get it voted on and the debt ceiling gets raised, then it'll be off to the races in the stock market because that big concern will be behind everybody. I think the hardest bearish macro event to overcome is the inverted yield curve, but some do point to the fact that the Fed had an unprecedented speed in his rate hikes, which may have attributed to this yield curve being so inverted. And it also lends to the question of, even though we are not going down this year, perhaps that inverted yield curve could be pointing to a slowdown that occurs in 2024, which could allow these markets to continue to rise for the rest of the year and only come down 20% from new all-time highs. That's something that we have to keep as a possible outcome of where these markets will go. Then we've got the falling GDP, which is a huge concern, but it's not a forecasted negative number. And one of the dynamics that we've yet to see with this decreasing GDP is high unemployment. Those are typically the two big factors that indicate that there's going to be a bad recession, and we simply don't have that other factor. That's something that we've got to keep in our minds, is not the same as every other time. Matter of fact, I'm going to cover a subject which I don't have prepared today, but it's basically about how these fast food chains, McDonald's, a lot of them out on the West Coast in Texas and Arizona, that have actually been caught using underage workers. We're talking people as young as 10 years old to 14 years old. That people have caught them using these underage workers. When I first heard this story, I didn't believe it, but I did look into it, and there's quite a bit of verification that McDonald's and some other fast food chains are resorting to underage people to keep these stores open. And that's where I just got to point out to how tight the labor market is when you've got people that are risking breaking the law so they can keep serving hamburgers, Whoppers, and Big Macs. Then perhaps all of the factors that we need for a massive recession are not in place yet. And so my bottom line position, and it's something I've shared with you guys before, that this is not the right time to be a bear, it's not the right time to be a bull, and it's definitely not the right time to be a hog. What we all need to be right now is the buffalo. The buffalo grazes. He's selective. He's not pushing, bearing down like the bear, nor is he charging like the bull. He's just grazing through the economic horizon, grazing through Wall Street, finding select items that he can consume, select stocks that he can buy. So right now, man, we've got to be the buffalo. When I listen to other billionaire investors and hedge fund managers, I often hear them using the word that right now is a time to be selective. There's going to be companies that are going to do extremely well out of this environment and are going to emerge even stronger. And that's what everybody's trying to do. They're trying to identify those companies. I'm going to touch on two of those companies today that I've been chewing on, and I'm going to give you guys the technicals for them. I wonder if you guys can guess what they will be. Well, two of my winning stocks, especially winning today, is Alibaba and Tesla. Both of them have had great days, moving much higher. I'm going to start off and look at the BABA chart with you guys. That's Alibaba. We are, in my view, headed to $95 to $96. That's my high target. I'm expecting a struggle at both 95 and 93. I think there's going to be a battle that has to be fought there before this can go higher. And so a likely way that I'll play that is when we get up to those areas of resistance, I will hold my shares and I may simply hedge my share position with some puts to profit from it moving up and down. But here's one of the big dynamics. I was asked a question about Alibaba. Somebody was in at $97 and they're like, Josh, should I just sell right now? What should I do? It's had a nice run today. Here's what my biggest concern would be if I were in that position. My biggest concern is that if we actually did break above $95 and even get back to $105, if we accomplish that feat, what you would find is that 95 would become the new support, and you'd be on the wrong side of the trade because all of the room would be to the upside from 95 and above. So I'm going to say that beneath $95, we're in a bear zone, but we have to see ultimately in the next couple days or the next week or so how it plays against this, whether it breaks through or whether it begins to fall back. That's how I'm going to trade it. One of the key areas that I want to point out to you guys is going to be $87. as we've broken up. If we get up to 93 or 95, I think we're going to get a back test. We want to find support at 87. We want to bounce. That's going to be a really good confirmation to me as a technical trader that this has got more room to the upside. All right, Tesla. Tesla's having an amazing day. Elon Musk did an interesting interview yesterday, and I found a lot of what he said to be fascinating. I'm just going to highlight one point to you. He more or less was questioned and asked about how controversial he is with a lot of the comments that he makes, some of the personal attacks against politicians or businessmen. They said, hey man, can you afford to do that? Why do you do that? Now he gave a very thoughtful and slow response. He didn't give a fast reply. It seemed as if he was really thinking of how he would answer it. It almost seemed as if he was processing his answer in his heart. When he ultimately answered the guy, I'm going to tell you that he gave a response that I think many would characterize as, I simply don't care. I'm going to do as I want, and it doesn't matter if it costs me money. And, more or less, it sounded to me like a billionaire that said, hey, I've got what's called FU money. Forgive the term of phrase. But I think it's true. Elon absolutely has what many would call that FU money. And he's more or less saying, I am going to do as I please. And of course, the guy questioned him, well, what about the shareholders? Now, interestingly, despite such a controversial statement made by Elon, Tesla's flying today. So the market didn't seem too scared by that remark. Matter of fact, it almost seemed, his interview seemed to buoy the stock. Over the last couple of days, we've gotten a 7 to 8% pop, breaking higher. And I think the bottom line is that for us to get up to my ideal price that I've been saying for the last couple of weeks, that we're going to ultimately come back and backtest, that's the 183 mark. We've got to see it break and close on the daily chart above 174. Until we make that move above 174 and the back test of 174 and we see a bounce, until that happens, we do not know for sure whether this will get to 183. It had the same trouble breaking through 164, but it eventually did do it. And I'm speculating pretty hard that we will indeed break through the 173 area and we will eventually get up to 183. And that's going to be the toughest spot to consider what we should do, because at that point it will have had an epic rise. Yet again, we'll have moved from 153 all the way up to 183, which is an area where people are going to want to take profits and let it cool off a little bit longer. And it's another reason why I want to point out to you guys, man, it's worth learning these charts. It's worth learning technical analysis, because when you give yourself this little bit of time to study, it gives you the confidence that you need to take these risk positions and then obviously to enjoy some nice profits. All right, that's all I've got for you guys today. As always, I appreciate so much you hitting that like. Let me know in the comments section how the markets have been treating you in the last couple of days. If you made it this far, then hit that subscribe, and look forward to seeing you all in the next video. Peace and blessings, my friends. Take care.